Good morning, welcome to Join the Dots. As I've said before, you have to find the truth before you can join the dots. Otherwise you're joining the dots to a place that just isn't going to help you. So yesterday I talked about pre-crash conditions everywhere. The bond markets are screaming it. The central banks are telling you they're buying gold. Okay? Pre-crash conditions. Everything is in place for a crash. Liquidity tightening, property prices falling, banks stocking up on short-term bonds. Okay, let's not go there too heavily now. Let's think of the future. What is the future beyond the crash? The crash is inevitable in my world, inevitable. So we have to prepare for that, and that's what the point has been of all these talks on YouTube for you, is to help you understand that the crash is inevitable. So what's the future beyond the crash? Well, obviously crypto is going to play a very large part. Why? Because after a crash, two of the things you need are things to be cheaper and things to be more efficient. That's what a crash does. It takes out all the excess, it takes out all the ridiculous charging structures that are built up over a period, and it takes you back to basics. And basics are efficiency and price. Can we get things down? Crypto can do that. But a lot of people, I think, are still confused by crypto, as I was only 9 months ago. I had no interest at all in crypto 9 months ago until I was introduced to XRP and its purpose. Not just XRP, its purpose. It's the purpose that gives it value. And what we're seeing now is that Swift, for instance, has got 15% lower volumes in the last period, 15% down. Crypto is working itself into the system. People are using it, but it's not broadcast, is it? You're not seeing it on the 9 o'clock news. You're not seeing it in the FT. Swift is already 15% down. So people are waking up. The thing is, we're just so early, because if you see crypto now, you're still early. Even though Bitcoin's been out there since, what, 08, 09, you're still very early if you see crypto and its real purposes now. And I can send you a video on that, produced by All In Crypto, there are thousands of sites out there, don't get me wrong, thousands of sites. I mean, XRP is going to 20 trillion, each coin. Nah, rubbish. But one I follow is called All In Crypto, because he only deals in facts. He deals in facts. Yes, he has some ideas on the future, and yes, you project those facts into what a future might be, but he deals in facts. So, cheaper, efficient. Swift is feeling that already. And there'll be the likes of MasterCard, Visa, anything that takes money off you when you transfer money. Banks will feel it, and this will hurt them. It will hurt their earnings. I want to return just for a second so that you can see how this links, joining the links, okay, joining the dots to make the links, to see what's happening. I talked yesterday of pre-crash conditions. One of those was the bond market. It is in an awful place. And the main thing that is going to happen here is the steepening of the yield curve. So we're here at the moment, it's going to go like this, and the long end here will be higher probably than it is today. That's a frightening thought, isn't it? Because that's what mortgages are basically calculated off the long bond, okay? Off the 10-year, not the long bond, that's 30. Okay, so JP Morgan put a piece out. Rates higher. Yes, I think they will be. I think the yield curve will steepen and those rates will go higher. So Morgan's piece was rates higher, whatever Trump says or does, and people are buying gold. Central banks are buying gold. Yes, they are. But they're also buying US bonds. Did you know that? Did you know since they raised the debt ceiling, which was only 2 weeks ago, all right, there have been 441 billion new US debt. 441 billion in 2 weeks. They must have been holding an awful lot back, waiting for the approval. The debt now 36.7 trillion. of debt that is going to become less valuable as the yield rises. Who wants to hold that? Who wants to hold that long-term debt? The problem is that an awful lot of people won't want to hold it. Who's holding it at the moment? Foreign investors have increased their holdings from 915 billion in the last year to 9.05 trillion in US bonds. And yet all that investment in the US bonds, all that investment in US stocks, and the dollar's gone down 10%. The dichotomy is obvious. Somewhere, the dollar is bleeding heavily, down 10%. And yet, people are loading up on US bonds with a yield curve that's likely to steepen. Wow, what a mess. So what's the future? What do we see afterwards? Well, afterwards, we see much lower asset prices, be that property, be it bonds, long-end bonds. Short-end bonds will do well. Long-end bonds. Okay, we see much lower prices, commercial real estate, private equity, private credit, anything that the banks have invented in the last 30 years to take money off you. Anything that the banks have invented. All those things, private credit, private equity, they've invented them all. But they're going to be put onto a ledger, aren't they? They're going to be tokenized. All these holdings in the end, 10, 15 years, doesn't matter how long, they're all going to be tokenized onto ledgers. Okay? And that's where your crypto, your ripples, and the others are all building networks to allow that tokenization and to allow cheaper, more efficient transactions, because they're going to have to be cheaper and more efficient. So your legacy service providers who don't provide cheap, who don't provide efficient, they're finished. They're going to be wiped out. There's no room for them. There's no place for them in the new world. So I will send you the JP Morgan piece. I'll link it down below, okay? And while I'm linking down below, please subscribe. Please, we whizzed past 500 this weekend. Let's get it to 1,000. Let's get the truth out there. People don't know the truth. They really don't. They haven't got the time, the inclination, the information. They haven't got anything to give them the truth except sites like mine and others. There are many sites on YouTube that are tremendous, and I quote them. And what I do is I link them for you so that you've got them in the future, so that you can always refer to them, because they produce a video every day. Doesn't mean every single one is incredibly valuable. I try and bring you the highlights. I try and bring you the very best so that you have a chance of, like me, joining the dots. So the future is going to be very different. We're going to go into a world where values of an awful lot of things change very dramatically, and that changes our life very dramatically. I talked about the JP Morgan piece I'll send you. I will link in below also the crypto piece from All In Crypto that says, basically, what does it say? It says, you're so early. Yes, we are early, because that's the only place to be, is early. You don't want to be late. You do not want to be late, do you? Okay, you want to be early. And all the signs are that we are early, but also we're correct. Look at the price of gold, look at the price of silver, look at the price of XRP. And I mentioned, I think, a couple of days ago, I'm also looking at XLM and Hedera. And I've been invited to look there by All In Crypto. They're all ISO, and they all have a purpose. Now, I might lose a lot of Bitcoin followers over what I'm going to say about Bitcoin. But I think, as I said yesterday, I think Bitcoin was the clown. It was the way of getting everyone involved or introduced to or thinking of crypto as part of the future. But at the end of the day, let's be very blunt. What is its purpose? And who controls it? Because we're, as I've said to you, we're going to go into a world, I thought we were there already, but it's going to get worse. A world of corporate fascism, where the mega corporates, just like they've done to the internet, the Googles, the Amazons, they've corralled the internet. They've captured it. Whereas the internet was meant to be something for everyone. It was meant to be freedom. It's not, is it? It was captured by the largest, and yes, they're very clever, but with what purpose? To dominate. To dominate. And corporate fascism now, we saw it through COVID because we saw it through the pharma companies, corporate fascism, working with governments, large pharma companies, governments, knocked together against the people, took all our freedoms, all our rights, all our choice, and told us we have to take that product from that company. That's corporate fascism. It will come again, or rather it will expand as we go through this journey. And there's no better definition and there's no better description, there's no more passion on this than is shown by Gregory Mannarino. Please look at his site. Okay, I'll put a link in below. It may come up, it may be blocked because he's now paywalled. $3 a month? For goodness sake, $3 a month? Pay it. You'll never get a better description of what's really happening out there. And the last one I'm going to link to you today is from Wall Street. Link below. This is the one that has all the bond data, and believe me, it's an encyclopedia, or Wikipedia we call it nowadays, wouldn't we, of information, okay, about the bond market, who's buying what, who's got what, is it corporates, is it governments, and think about it. Think about it. If Trump wants a Mar-a-Lago, if he wants the dollar depressed by another 10, 15%, whatever it is he has in his mind, what are all these people doing buying long US bonds? What are they doing? What are they going to do? Have a think. Okay, so I'll link in Wall Street. Please just scan it. You don't have to understand every part of it, but you have to see the direction of travel. And the fact that all these institutions, all these foreign investors, all these governments, all these central banks are holding huge amounts of dollar debt that Trump wants to devalue by what, 10, 15% more than it's already devalued? What are they going to do? Thank you very much.